Hi everybody, Phil Strong here again with another video blog. Thank you very much for joining me today. Today, what I'd like to talk about is the phrase second mortgage. And what does that mean? Well, the 5 points that I have for you start with point number one. What is a second mortgage? A second mortgage is it's another mortgage that you take on top of the first one. So let's say when you buy a house, you take out a mortgage with Bank ABC. Bank of ABC, and they take what's called the first mortgage on your property. Now let's say you get into trouble or you need some extra money and you go back to Bank ABC and they say, hey man, we ain't borrowing you no more money, this is it. So what you do if you're really desperate or you're in a situation where you absolutely got to fix something, then what you do is you take out a second mortgage and you go to a different bank, say Bank XYZ, and they give you the money and they take a second mortgage on your house. So now you've got two mortgages on your house. That's what that second mortgage is. So my second point is why would you get one? Well, many people get one because they need to bail themselves out of trouble fast and it's the only access to cash they've got. Now the situation where this would work for people really well is if they have got good equity but don't have heaps and heaps of income. So what I mean by that is they've got room in their property to borrow money, but their first bank think that they can't afford it. The second bank obviously does. Now, most commonly this is self-employed people that have income that go all over the place. All right. Why would you get one? Bail yourself out of trouble as fast as you can. Point number three: don't get one. My advice is look, I've been in trouble myself with finances and had to bail myself out, so I understand that this happens. But really, when you consider how many people have access to your personal home, a second mortgage, you're just increasing your access to trouble. So please, I encourage you, I implore you to do everything you can to make sure you dig yourself out of the debt in the best way you can, because it could end up really bad for you. What's happened recently in the United States and other countries is that the property market has gone inwards, it's gone down in value, and many of these banks are now saying, hey man, we want our money back. And if you can't sell, or you haven't got the value in your property, they can force you to take action that you may not wish to take. So, third point, don't get one if you can. Now, fourth point is if you've got one, pay it off as fast as you can. Absolutely, you need to make it a priority to accelerate the payment plan on your second mortgage, because you've got to clear it off, you've got to get rid of it so that that bank says, yep, we don't want your house anymore because you don't owe us any money. That's your goal. Pay that house off, that second mortgage off as fast as you can. So what you need to do, point number five, my final point is this. You need to find some strategies that work for you that help you to accelerate your mortgage repayment. You need to be mortgage free as fast as you can. Now lucky for you, I teach strategies to help people pay their mortgage off. And if you want to do that, obviously you just go to howtosmashyourmortgage.com and you can pick up on those strategies in a number of different ways so that you can pay your mortgage off. I can promise you, there are 5 strategies that work for me. At least 2 of them or 3 of them are going to work for you. So go and do that. But finally, I want to finish with this. My encouragement for you is to remember what you need to focus on. Property ownership. What you need to focus on is your equity. That means increasing the amount of the house that you own and decreasing the amount that the bank owns. That's your goal. So I wish you all the best. Thank you very much for joining me. My name is Phil Strong and I look forward to seeing you again in other videos. Have a great day.